Hi, it's Larry Gaines, Paracycle Trading. In this video, I want to go through the markets and show you some of the correlations that are going on in the kind of tug of war we're seeing between some of the major indexes. Primarily, we've got bonds and T-notes moving higher, and that is pushed down the markets a little bit on the stocks, or it should. But Friday, we had a nice rebound on the equity markets too. So we had both stocks and bonds going higher. So one is going to be right, the other is going to be wrong. So I'm going to go through this and show you some of the major correlations and potentially the outcome from those correlations. Before I get started, though, I'm going to have a boot camp for weekly options. Going to teach everything there is about weeklies, how to use them for all kinds of different trading strategies. And this is going to be on March the 9th, Saturday, March the 9th. And if you'd like more information on this, just go to this URL link. It'll also be on this email with the blog video, but it's paracycleTrading.com/boot/camp/forward-weekly-options. So I'm going to have that March 9th, and it'll be an all-day event with a follow-up 90-minute Q&A on the following Thursday. So here's a look at the T-notes, and underneath you can see stocks. So you see that we've been in a really nice sharp downtrend on the T-notes and bonds. This is since December, and since December, basically starting right here in November actually, we've had a major uptrend on the stocks. This is the S&P 500 right here, futures. So you can see stocks going up, bonds going down. Well, you know, when we get in these type of markets, there's a kind of a fight between the bond professionals and the equity professionals, and the bond professionals are usually get it right more often. They seem to be more astute as far as the macro big pictures of the economy. So, you know, right now you can see we've had a breakout here on the daily on the bonds, and they moved up Friday and then stalled out right towards the top. But we also had, you know, then we had a sell-off here. This breakout, you can see the breakout came on the 21st of February, broke that trend line, and on that day you can see we had a hard down day. Now today we had a recovery back on the S&P futures, and we still had bonds going higher, so we had an open and a close higher than the prior day. So something's going to give here. Either bonds are going to start to roll over and equities continue higher, or bonds continue higher and equities continue lower. Now usually the bond market gets it right, so we'll see what happens. So I'm going to be following this, and I'll show you some of the other cracks, potential cracks, and the basically the outlooks for these markets and the various indexes. Now here's a chart of the 30-year bonds. You can see the same correlation. 30-year bonds going down, equities going up. We had that pullback on the equity, so we'll see if there's a follow-through either with this pullback to the downside and the bonds to the upside, or bonds have to start getting back into this downtrend. Now here's the S&P cash, and based on our system model using the Paracycle trading model, the markets have lost a little bit of momentum and stalled out, and so we had a neutral position on the 8th of February. And you can see that, you know, we had this big sell-off early in the week and this bounce back into Friday, so it's a pretty strong close, but the weekly system we're using still is neutral. And here's the next. Here's the medium-term time frame for the S&P 500 cash, and you can see down we came down on Thursday, broke below the 21-period moving average on the exponential, and closed right at it. And then on Friday we closed back right at the 8 EMA. So we've got the 8 EMA crossing down. We had a big move down for Wednesday and Thursday, and we held in this 1495 level. And now we had a rebound, so it's back above the 21. So, you know, it's still holding up quite well on the S&P 500. We're still short. This is still in a short position on our system. So we'll see how it handles being between these moving averages on Monday. Now, remember, we had the bonds going up and we have equities going up. Something's going to give. Now, here's the NASDAQ 100, and we're, you know, our system has it short, went short on the 20th. We had this big move down the following day on Thursday. It bounced back up here today and basically closed pretty much close to the highs of yesterday on Thursday. So this was a Friday close, back up, but still closed below the 21 EMA. you've got the 8 EMA now starting to cross the 21, so we're still short on our system, and NQ's lost momentum, but it's holding this key area right here, 2705. So you can see here, we talked about this quite a bit, this consolidation, and then it broke above. It looked like it was going to consolidate here, move higher, but broke back down. So you've got this area that it needs to hold. It broke initially on Thursday, then you've got this gap area in here. So this will be key. If you start breaking this area in here, I'm going to look for this gap fill, and this could be a good short opportunity on, say, the QQQs, something like that. So right now, a little bit of lacking momentum, still down on our system model, but a nice rebound, and it basically an inside day based on Thursday's bar down. So the direction right now is uncertain, so we're going to look for other signals here. Now here's the dollar index. This has been a very key part of the markets and the correlation that it offers to the broader markets. You see this major breakout, and we've had a huge move to the upside on the dollar. So this really kind of capped the equity markets and stalled them out, and basically they started to crack last week a little bit to the downside because of this momentum from the dollar moving up. So if you look at a Fibonacci retracement, the 618 is right in here at 81.85. So another 50 points, another 50 cents up here, and then it comes into major resistance. So we could see this dollar strength stall out a little bit, retrace. Now if that retraces, that would probably force equities a little bit higher on the commodity side anyways. Most of the international global equities or commodities are priced in dollars, so as the dollar goes up, that affects the price of the commodities such as basic materials and crude oil. So we could see with this really parabolic kind of spike up, we could see it stall out, move a little sideways, which could start the equities moving sideways again or back up a little bit as well. So there are a lot of conflicting tug-of-wars going on here. We have the sequestration, where at Friday of next week, if things aren't done, which doesn't look like, they'll start cutting certain expense items for the U.S. government, such as in defense and other areas they'll have to cut back on. These are things that were set up over a year ago. If they didn't reach certain debt obligations, that we'd start reducing some of the debts automatically, and that comes to a head next Friday, which I believe March the 1st. And so we'll see these relationships, how they pan out. But right now the dollar is still very strong. So, but with this kind of strength, it could also get a pullback, which would push the equities a little bit, perhaps to the upside or sideways. Now the other correlation is the euro dollar currency, and you can see it broke this trend line on a weekly, and it's holding right here on the 21 EMA on the weekly. So you can see when we've had it come down before, it broke below this 21 EMA, bounced back up, came down here again, held. So this is a key support level right now, so it's on support. So the question is, will it follow through to the downside, or is this going to hold here, bounce up, retrace? We saw how extended that dollar was up. It wouldn't surprise me to see a little bit of a retracement here, but these are two of the currencies you need to keep an eye on, as well as the yen, which I'll pull up right now. We've talked about this for the last 2 weeks, these currency relationships and how they can affect the markets. So here's the Japanese yen. Looking at the yen, it's trying to maybe create a little base here, but it really needs to get closed back above this kind of weekly high here, or these weekly highs, to get going to the upside. So not a lot of strength, but at least you've seen 3 weeks where it's hasn't really gone lower. It's kind of stabilized a little bit, but it's not showing much momentum either way, up or down. So it's just kind of tracking sideways. So keep an eye on the dollar. You want to see if the dollar continues to move higher, if the euro continues to move lower, if the yen starts to stabilize, move higher, and then keep an eye on those bonds. If the bonds continue trending higher, that's the U.S. Treasury bond, 30 years, and the T-notes continue to look to trend higher, then these are all factors that will be negative impact, that will have a negative impact on the equities. Now if these relationships start to fizzle and you see the yen start to go lower again, you start to see the euro rebound like we were showing, and the dollar pulling back and bonds pulling back, then you're going to see equities go sideways to higher again. So good luck on your trading Monday, and I'll talk to you after the close. Now this boot camp, which will be again March the 9th on a Saturday, it'll be from start at 10 in the morning and go until 4, maybe a little over. Usually a little over, but it's going to be a great boot camp. We're going to specifically get into weekly options, how to use those for a lot of different strategies, earnings, various different strategies for weekly option expiration strategies. Anyway, you can get your choice of any of the power cycle trading courses, one course. You'll get the 6 hours of this live interaction, plus it'll be recorded, so you'll get that too, plus a 90-minute Q&A. You'll get also the Option Trading Made Simple course. It's a great course to how to select option delta. And then you'll get my daily outlook, market outlook, for which comes out. It's a video newsletter that comes out each evening, and you'll get that for 3 months. And the Power Cycle Virtual Trading Room, our live trading room, you'll get that for 2 months. So everything is offered here. Great value, over $3,900. If you're a member, $597. Non-members, $997. So I hope you'll sign up for it. Again, it's on March the 9th. That's a Saturday. And if you want the information on the URL, it'll be in this email, or you could go right here. So it's again powercycletrading.com//boot-camp-4-weekly-options. Good luck. Talk to you Monday.